You're right, we had a massive run-up in revenues in most of the states by 2008. And most of the states spent up to that level. And so part of the mentality, I think, of those that are looking at the expenditures of the state is to get back to that level in terms of revenues. But you've also have a growth problem. I mean, if you look at most of the states, they were on an unsustainable growth pattern that was far outstripping growth in GDP nationally or in their state. And that's to me, that's the bigger problem. Structural deficit is trying to catch up and rein in not just the expenditures on a yearly basis, but also that growth pattern. The growth pattern in California was completely out of control for a number of years. It was, I remember tracking it back in the early 2000s, and it was double digits in terms of spending growth. Well, actually it is, but those types of levels are just completely unsustainable by even an economy the size of California.
Just a quick note, I would add that in Texas, we're actually back to our pre-recession level of employment. So we have recovered. Our pensions are healthy, not really because of anything we did, because our pensions are basically set by Constitution. The legislature has to put certain minimums in there. So we have pretty healthy pension systems. But I mean, we still have budget challenges. And I think one thing we haven't mentioned today that is an issue for all states. And I first went to work around government 25 years ago. And as I look at how government has changed over that time, at least in Texas, our economy is about 4 times bigger. Public education funding is about 4 times bigger. Personal income is about 4 times bigger. All the rest of the state budget, except for one category, is up by about 4 times. But one category, Medicaid, is up by a factor of 15. And what is happening in the states is, absent our own desire to do smoke and mirrors and funny money on the side, ultimately we're on a long-term trajectory where Medicaid is causing incredible fiscal pressures on the states. And with the expansion of Medicaid over the next several years, the trend is only going to get worse. And I think Medicaid is a challenge that is going to transcend all state governments over the next couple of years.
And that, I was going to ask you, Joe, to address that, or if you, Greg, would prefer to address Medicaid. And I asked you to also tell us what's on the horizon that's going to affect the states in a big way. And while we're on the subject of Medicaid, you mentioned the healthcare lawsuit, the state's suit, state challenge at the Supreme Court level to the federal healthcare reform. So why don't you talk about both of those things?
Okay, 1 minute, right?
Yeah, 1 minute.
Well,
take your time.
Medicaid, we've done some papers on this. I mean, a lot of it's just the way it's structured, where states get reimbursed for expenses. And essentially, you know, it's a problem you see across healthcare. Nobody has any incentive for cost control, and in fact, states have every incentive to inflate their costs and get more federal aid that way. And we saw a lot of states do this at when state budgets were really bad in 2009, 2010. They were imposing hospital taxes, using part of the money to get more federal funding, and then using the rest for other programs. And you know, ultimately, the federal government is going to need to really loosen up on the restraints it gives on the states. California, to its credit, adopted some co-pays and some cost control measures in its budget for Medicaid, and was overruled by the Federal Department of Health and Human Services on that.
Billions of dollars worth.
Yeah, so that's money they got to find from somewhere else, in addition to the phantom money they were counting on for the budget. Later this month, the U.S. Supreme Court is hearing a modern-day record number of days of oral argument on the health care law, the Patient Protection and Affordable Care Act, and they'll be judging its constitutionality. I'm often asked to sort of give my guess on how that will come out. I think it's about 50-50 right now on whether it will be ruled constitutional or unconstitutional. We submitted a brief on the taxing power aspect of it, but the more sexy one is on whether it's sustainable under the Commerce Clause. If you're a law junkie,
that could potentially revisit the 1930s New Deal legislation. That's really the heart of, you know, the constitutional law junkie, but that really revisits some of the court's decisions in the 1930s to prop up the New Deal.
Yeah, and that's a gigantic question mark, not only for states and the federal government, but also for businesses and individuals, of what is the healthcare market going to look like in 2 or 3 or 5 years. And in addition to that, you have the Bush tax cuts, which were supposed to expire at the end of 2010, and were extended 2 years, and so they'll expire at the end of this year. All of them, not just the ones for high-income earners. The alternative minimum tax, which was patched through the end of last year, and that patch is technically already expired. But they usually throw together a patch in December to cover the year that has just ended, although they haven't done that yet. The estate tax is expiring at the end of the year. They have to come up with some solution on that. All of the different extenders, the R&D credit and all of that stuff is expired. I mean, essentially the entire federal tax code is expiring at the end of the year. And whether they're going to just sort of paper over and renew it, as they did with the payroll tax holiday, which was supposed to expire at the end of February, or they're going to do something different, it remains to be seen. So, we hear a lot of talk about uncertainty. I work for the Tax Foundation. I can't tell you what U.S. taxes are going to be like next year because of the level of short-term legislating we're doing on a lot of fundamental questions about our taxes.
And that brings us back to the discussion that was going on in the other room with the governor and the former governors about doing what's in their conversation. They were talking about doing what's best for Nevada, and one of them, I don't remember which one, said, well, I'm not going to go into the reasons that we don't do that now. But unspoken in all of that was there's an immense partisanship that I think we can blame for this short-term action. So, absent some kind of cure for partisanship, where do we go with this? Yeah, that's what I thought. You can all leave now.
It's a really good question, but I think the politics, unfortunately, to some degree, reflect the country itself. I think we're struggling as individuals. The parties maybe tend to over-reflect that, but I can see even in California, the polls are very anti-tax, and yet when isolated on somebody in particular, they go up. And so so we're generally anti-tax, but they tend to favor spending. Don't talk about cutting education or cutting particular programs that are unpopular. And so I think we as a nation are struggling. Politics reflect that.
I think we need to hold them accountable, not just for, just generally, but also, somebody says, I will not raise your taxes and I don't want to cut any government spending and we need to balance the budget. You need to have a follow-up question for that.
Well, what would your follow-up question?
Well, you can have 2 out of 3, which 2? And that would be my critique of probably some of the more Republicans. And then on the Democratic side, these entitlements are not sustainable the way we have them structured. And the solution often offered by that side of the aisle is, well, we'll tax somebody else to pay for benefits for everybody. But you run out of somebody else, and there's only so many times you can use a surtax on high-income earners to pay for every new idea that you have. So we need to hold our leaders accountable when they say things like that. I mean, we just had, I don't want to get too partisan up here, we just had Newt Gingrich talking about $2.50 gasoline. And I don't think anybody asked him, how are you going to do that?
I would have. All right. I don't want to toot my own horn or anything.
Just one more point to think about. In the context of the federal government, we have, if you look at the history of this country, we have grown the size and scope of the federal government over the last 200 years significantly. They are different from the states in one great respect. They can print money. And when they print money, ultimately, if they aren't responsible about it, it results in inflation significantly. And that potentially is something we're going to have to reconcile in the states, because not only are they dumping costs and obligations onto us on the healthcare side of things, on the social service side of things, but then if because of their recklessness, we have out of control, or at least excessive inflation, then all of our other costs go up too. So it helps us with that, though.
The state and the states are married to the federal government because in many ways, many aspects of our budget, depend on matching or depend on some kind of reward that we get here at the state level for doing some kind of policy that then results in federal money. And oftentimes you cannot alter that once you've accepted it, once you have implemented the policy, once you have gone forward and accepted the money, you're locked in. You may not go backwards. So I'd like to address that. Given the fact that everything crashed and everybody had to redesign, did any state address that aspect?
Independence from the feds, the Don Corleone syndrome.
No one effectively, I think. I think Wyoming did a study to see, like, well, how could we survive without federal matching funds if we just walked away from all of it? And South Carolina last year became the first state, as far as we know, ever, to have a majority of their budget made up of federal funds. So, that's a crucial question. I spent about...
And what's the implication? In real terms,
well,
what does that mean?
It's a loss of flexibility. We've talked about ballot box budgeting, where you insulate part of your budget, sometimes a significant part of your budget, from prioritization and the ability to shift things from one thing to another. And that's what federal funds do too, where you're locked in spending on money on something, even if something else is collapsing and in desperate need of assistance. And, we had, as part of the stimulus, all sorts of standstill agreements and hold constant, I forget what the term is, but harmless provisions designed to basically prevent states from reprioritizing what they were doing with the federal funds that they're getting.
I'll give you an example on the tax side of things. You're all familiar probably with the national effort on forcing out-of-state retailers or remote sellers to collect and remit, because a lot of the Amazon taxes are going on. Well, part of the difficulty with Congress through their Commerce Clause powers, part of the difficulty that Congress has faced in exercising their Commerce Clause powers to come up with a national solution so that everybody operates under the same rules, so it's not state by state by state, is state sovereignty. The states argue very vociferously at the federal level, we're not going to give up our taxing authority because we're sovereign, and that's an encroachment upon, when the federal government decides what we can do or can't do, it's an encroachment on our sovereignty. But they don't seem to have that same discussion in the context of revenue that they're given when the federal government demands things in return. They want that money so desperately, or for infrastructure type projects, but they're not asking that same question, and they should, because that's really what the states give up when they cede to the federal government's demands in exchange for money. They're giving up their sovereign authority to decide their own fate.
All right, I'm going to give each, I've got a handful of questions here from the audience, and I want to make sure we get to those so everybody gets their question answered. I want to give each of you some wrap-up time, though, because I didn't address everything with you, so if there's something you think needs to be addressed that I didn't ask, I'd like you to do so before we get into the questions.
I'll do real quick. In the context of trying to promote growth, trying to grow jobs, from a business investment standpoint, businesses, we do a study every year on the taxes that businesses pay. And it's kind of surprising, the last study in particular, the biggest tax that business pays is the property tax. 40% nationally on average is what they pay. After that, sales tax. Because a lot of states, I'm not sure about that, but they tax some level of inputs, especially if you're taxing services too. That's the second largest tax. Then from that, the various excise taxes on, whether it's on utility services or in California, a lot of local utility user taxes. The third is the corporate income tax, which you guys don't have. So if you look at your state from a competitive standpoint, and we sort of rank Nevada kind of in the middle in terms of competitiveness, kind of in the middle because of those three taxes. Property tax kind of high, sales tax rate is kind of high, and you've got excise taxes as well that you rely on. So that makes Nevada, at least from a state level, less competitive than some other states. I think Joe mentioned earlier, tax is not the only issue the businesses look at when they locate and grow. It's just one. But think about that when you're doing it. Second thing is, I think a lot of times policymakers, legislators forget, or maybe don't understand a basic rule of economics, which is when you tax business, you're not actually taxing return on investment that much. Really, there's three pieces to a corporation business, and that's sort of corporation of business that you tax when you increase business taxes. One is wages. You're depressing wages, you're inflating prices, or at the last, you're hitting return on investment. And return on investment, I think most of these have shown, is the one that's hit the least, because at the end of the day, if investment doesn't get the return that they're anticipating, to go somewhere else. That's part of the investment model. You're trying to get a return on that. So when you tax business, you tend to tax wages, and then you tax people generally through price increases. And so those sort of basic economics to think about when you're facing the legislature or Texas Marksman's tax.
All right, Mr. Henchman, please give us a final few thoughts before we get into questions.
Sure. Well, whenever I'm in Nevada, that's something that I emphasize. People pay all taxes. No matter who's signing the check, ultimately those taxes will be paid by people. And we often forget this in the context of business taxes. The corporation is just a piece of paper in a file cabinet somewhere in some Secretary of State's office. Ultimately, those taxes are being paid by the investors in the company, or the workers who work for, the consumers who buy the products. So, we're very skeptical or let me frame it a different way. We're proponents of transparent taxes because we think that leads to better government. I'm native Californian, one of 3 on panel, I guess, and one of my big faults I see with my home state is this idea that we can get a free lunch, that we can spend all of this money and somebody else will pay the bill. We're going to make business pay it, or high-income earners, or out-of-state people. And ultimately that means that we're demanding services that we're not willing to pay for, that we think aren't good enough to deserve our money and our investment and our time. And I think that's just a problematic way of looking at government. If the services are important, then you ought to be willing to step up and